Have you ever wondered how to read the candles you see on the GDAX and other crypto platforms? Well, I've been doing this for 2 decades. Stick around for the next couple of minutes and I will get you started in the right way. So let's go ahead and get this thing going. Today's video is going to help beginners set up with a good understanding of candlesticks. I want you to be sure to subscribe to my channel, especially if you're more advanced. I'm going to be doing videos starting tomorrow on my top 5 candlestick patterns, my specific candlestick patterns that I like to trade. So where did candles come from? The Japanese began trading using candles in the 17th century to trade rice. Personally, I like candles because of 3 major reasons. First of all, I like candles because the what is more important than the why. The what being the price action and the why being news and hype. The what, which is price action, is more important than the news and hype. The second thing, all worldwide market information is reflected in the price action. So it doesn't matter what happens with Bitcoin or Ethereum or Litecoin in China or Germany or the United States, it's all going to be reflected in that price action. So when I'm trading in an underlying security or market or crypto, whatever the case may be, I really don't care what the world news has to offer or what the hype is. It's going to be reflected in that candle. Then the third thing is you must understand that buyers and sellers are moving these prices based on their market expectations, which could be interpreted simply as fear and greed. Are they fearful of the future, or are they feeling greedy about the future? Those are the 2 influences that affect these prices, and they are reflected in the candles. So let's take a look at a couple of basic candle patterns right here. So right here, this green candle, the green candle signals an up day. This particular point right here is the open. This particular point right here is the close. So what about these? Let me change colors here. So what about these little points here? These are called shadows or called wicks. If this would be a real candle, this would be the wick on the candle, but they're often called shadows. This is how high and how low this candle would have traded for this day. This is called the upper shadow, and this is called the lower shadow. So this candle tells me a story, much like the rice traders in the 17th century in China. They could look at this candle and it would tell them a story. So I know this is my open, and I know the open would be lower than high because this is up day. It means it's closed higher than the open. So it tells me a story. This crypto here, opened here, it most likely drove down to this area here. And then people started buying and it went up as high as this area here and then settled at the end of the day right here for the close. So I can look at this and tells me a couple things. Yes, there were some sellers challenging this price. Sellers tried to drive the market down, but it was not long before the buyers were able to overtake the sellers, and they drove the price all the way up to this level. And then most likely some of these buyers felt like they had made some profits for the day, so they sold off and it settled here, but no panic set in. This was probably a positive day. The buyers, the bulls, were in full control of the day. In general, this is a good day. It's open, close, upper wick, bottom wick. Also, you'll hear us talk about the body of the candle. We're talking about this area from here to here. That is the body of the candle. Okay, the body is opposed to the range. The range would be from this point here all the way down to this point here. The body is from the open to the close. The range is from the extreme high to the extreme low. Now, this day is a down day. The red candle signified down days. So I know the open had to be higher than the close for it to be a down day. It's going to close lower than open. So on this one, this particular point right here is the open. And this part of the body is the close. Here again you have your upper wick and your lower wick or lower shadow. So again, this candle tells me a story. It opens here. There was some positive energy in the morning and it drove the price up to here. This is the high for the day. But then sellers took control of the market. Sellers took control, drove the market all the way down to this point here, which would be called the low for the day. Then at some point in time during the day, buyers come back up and it actually ends up closing right here. So the bears or the sellers were in full control, but it was not all bad. There were some buyers that stepped in here at some point in time and drove this price back up. Now, a candle right along by itself, this candle here or this candle here does not tell you the full story. It's like if you're going to read a short story, this is one paragraph in the story, and this paragraph can give you some information, but you need to see the paragraphs before it and the paragraphs after it for you to get the story. But you must understand what each paragraph is telling you. So as you move on and start identifying different candlestick patterns and using them for price prediction, you need to understand these terms. If you're new to candles, you may want to go back and review these terms. So in looking at these charts here, you can see, by the way, if you were watching my video 2 days ago, you may want to go back and visit it on these moving averages. We were right here, and without looking at anything else but moving averages, which is a very powerful indicator. If you don't look at any other indicator but moving averages, that's one to look at, although I look at more stuff, and I'm going to be teaching that in future videos. But if you just look at moving averages, I know for sure I predicted a couple of days ago that we were potentially heading into a down market with this Bitcoin, and here's what's happened in the last couple of days. We went from 13,728 and we're currently trading at 11,594, but we've been as low as 10,026. So if you're in a market that afforded you to buy puts, which you can't do that here, but if you're in a market, you could have a great money making opportunity to the downside. But that's just an update on that video. So here, this candlestick here shows this is our opening. Price drives down to this level here. Buyers take control, drive it up here, and settles down here. Usually when you see a day like this and it settles in top, there's a high likelihood that it will continue up, but it's all relevant to the paragraphs before it, what kind of story they're telling. And in the next few days, if you will start watching my videos, we're going to go through different chart formations and start interpreting what these paragraphs are telling us about the whole story. So I'm putting together a PDF of my complete trading system. It has taken me over 2 decades to develop this system. So you'll want to keep checking in with this channel to make sure that you can snatch up this PDF just as soon as it becomes available. I will also keep making new videos each day. So like and subscribe. Be sure to ding that bell so that you can get notified when I come out with a new video. In trading, you must train yourself to be like the lion. Most people do business and trade like a scared gazelle. Train yourself to be like the lion. Dominate your domain. Analyze, educate, and when it's time to take care of business, you take care of business. Remember, if you don't kill it, your family doesn't eat. This is Blake Storm, SniperInvestor.com.